Nike stock, we have 5 videos up here to react to in regards to Nike. I wanted to hear what all these Wall Streeters have to say about Nike, and man, did they have a lot to say over the last couple days in regards to this stock. So we're going to react to this one, Wall Streeters talking about Nike. Then we're going to react to this one, this gentleman talking about Nike. Then I want to react to this one, this Wall Streeter talking about Nike. Then I want to react to this one, another one where Wall Streeters are going to talk about Nike. And then the last one up here, this one. I want to hear what all their opinions and perspectives are. I want to see where do they view Nike right now. Do they view this as a company in a very bad place? Do they say this stock is not a buy right now and it's actually a sell? I'm very interested to hear what they have to say and kind of react to this and share my perspective and opinion, and if I agree with them or disagree with them. Okay, appreciate y'all joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel, folks. I appreciate each and every one of you. Thank you everybody that smashes that like button, video in and video out. You mean the world to me. Thank you, thank you, thank you. July 4th, it's a few days from now. It's only a few days from now. 1000X, we're going to do a big deal. It's a one-day sale only, July 4th. If you want to enter in for that sale, click the pin comment of this video, enter your name, your email. We'll send over that deal as soon as it drops for full access to 1000xstocks.com. And we just added an SEC filing. So now we have SEC filings, earnings calls, the compare feature where you can compare 3 stocks, as well as mandatory metrics and advanced metrics for all these stocks. Saves you so much time. It's insane. So pin comment down there. Alrighty, guys, let's get into this.
Nike shares. I'm trying to find when they...
Oh, and also, in the comments section, let me know. Let me know. Are you a buyer of Nike stock over the next few weeks? Or are you staying away from Nike stock over the next few weeks? I would love to hear your guys' opinions and perspectives in that comment section. If you view Nike as a buy now at this point in time, or if you're like, no way, I don't want Nike shares. I'd love to hear from you guys.
Traded at 80 last...
Because you know my opinion. Screaming buy, easy money.
I think it might be like 5 years, 5 or 6 years. Falling pre-market, as you can see there, 14, almost 15% down to 80 after the company warned that 2025 fiscal sales down mid-single digits. Analysts, Bob Durbel is here. Analysts were looking for, what were you looking for? People were looking for up 1%,
yes,
right?
That's right, John.
So that's a huge miss. Your Guggenheim Securities Director of Equity Market and Securities, that's staggering. And as I said, I think it might be somewhere back in 2019, last time we were at these.
This is ridiculous right off the bat, right? Absolutely ridiculous. First off, why is it so shocking? Nike says, oh, sales are going to be down mid-single digits. Have these people not looked at all these other companies? Have they seen that Apple's iPhone revenue is down billions and billions of dollars? Apple's latest quarter, iPhone revenue was down like $6 billion on a year-over-year basis, right? The iPad business was down like $1 billion on a year-over-year basis. The wearables business was down like $800 million on a year-over-year basis. Look at Starbucks revenues. I mean, when does Starbucks ever see their revenues going negative? Their revenues are negative. Look at Home Depot. You go company after company. And it's like these people never looked at these other earnings reports and thought, man, maybe a global company like Nike could get hit as well. And keep in mind, Nike, their customer base is everybody, right? But at the end of the day, there's a lot of people that also buy Nike products that aren't in the greatest financial situation, right? And those folks, guess what? They've been hit by inflation harder than anybody's been hit by inflation, right? And so for some people out there, they just can't afford to go buy a new pair of Jordans right now. Yeah. I know it's hard to imagine for people that are loaded with money, but yeah, there's a lot of people out there that can't afford a new pair of Jordans right now. Can't afford a new pair of Nike Air Max or whatever, right? And so can't afford a new pair of Air Forces. Like, it shouldn't come as a surprise. People have been sliced and diced by inflation for 3 years. And so if you make a lot of money, if you got a pretty high net worth, like you have no problem, or if you have really low expenses, things are fine for you, right? But there's a lot of other people, we just got to understand, a lot that are not in that situation, are basically living paycheck to paycheck right now. I would say right now, there's probably the highest number of people living paycheck to paycheck since the great financial crisis right now.
These levels 5 years ago.
Yeah, no, I think a couple of things. Even in the near term, there's a big step down, double-digit declines expected in the next fiscal quarter. And, when you look at the pressures, there's 2 pieces of this, the lifestyle piece and then you got the performance piece. The lifestyle piece is their key franchises, Air Force Ones, the dunk shoes, and those are under a lot of pressure. The other piece of this is within digital. So, stores versus digital online and direct was down double digit in North America. Sort of aligns with some of those key, lifestyle franchises. So both of those businesses, are under a lot of pressure. China, is really promotional. I think in China was up 7%, but there were some shifts that went on, highly promotional, competitive, some macro concerns over there as well. So you put sort of the digital piece with the China piece, North America and China. We lowered our revenue expectations, our earnings expectations, and accordingly took down our price target.
Down to?
115 from 130. Ultimately,
that's still insane upside. Remember, Nike stock closed on Friday at what price? $75. He's saying it's going to 115 over the next 12 months. That's a big move up from here, folks.
Be at 80.
Yeah. No, I think the interesting thing is your point on the multi-year low is we had taken some numbers down, I think 2 months ago, just not enough. And so from the business standpoint, there was some expectation for, some turnaround work. This is a bigger leg down than we anticipated, but I think they're doing the right things. I think they're really focused on innovation. We have some, sporting events coming up. You've got the Euro Championships, you've got the Olympics, multiple innovative products within running, Caitlin Clark within women's basketball. They're hosting a meeting, in the fall, late November, to really reset things. And,
this is where people don't understand what's actually going on in the economy and where they don't understand what's actually going on with Nike. And they think the Olympics is magically going to fix Nike's numbers. No. At the end of the day, what it just ran you through, if somebody's living paycheck to paycheck and they don't have the money to go buy a new pair of Air Force Ones right now, guess what? They're not going to do it because they can't do it, right? If they already maxed out their credit cards and they're paying already 28% on their credit cards, they can't go buy a new Nike shirt, okay? It's not hard to understand for me at least, but people don't understand what's going on with the economy. If we were in a situation where Nike's numbers were, they're talking about down, mid-single digits, let's call it 5%, 6%, whatever, for this year, but Apple was reporting great numbers and Starbucks was reporting great numbers and Lowe's and Home Depot and all these other companies, all the global companies and UPS and FedEx, then I would be concerned. Then it'd be like, oh boy, why is their revenue going down, but all these other global companies are doing great? It's not the situation we have right now at all, right? And so, little food for thought in regards to that.
I think if this isn't a kitchen sink type of a quarter, it's close to one.
All right, I guess that's the positive. But Nike's always had competition. I mean, I know Hoka and there's some upstarts, but what? Put your finger on.
Those companies are all a joke. People try to talk about that. Those companies are all a joke. 5 years from now, you're going to hardly hear about those. Allbirds is nearly going bankrupt. 5 years ago, that was all the talk. Oh my gosh, Allbirds shoes. Now the company's nearly bankrupt. These Hoka, all these other companies, they're fly-by-night companies. Their business models are hot, then they go cold. It's the same thing decade after decade after decade, and people want to try to predict maybe this is going to be. No, man. It's happened to all of them. Reebok, One, they all come, they all go. It's going to be no different.
The real core of where they screwed it. The management did something, product mix, something is not right here. Some miscalculation was made.
I think it's a combination of two things to one thing. I think they stayed too long with these lifestyle franchises, with the Air Force Ones, with the Dunks, without a pipeline of innovation. So now they've accelerated the lifestyle declines, inventory's down 11%. And then, the pipeline, you can't turn it on overnight. So they've accelerated forward some things that they've had over the next few years into the coming quarters. They're talking about a 3-year pipeline of new innovative product. So if they can get sort of supply demand right in lifestyle and really get some traction in some of the performance and innovation, I think that can lead us higher.
It's going to be sneakers. It's all about sneakers, and it's not. I mean, they're the largest apparel maker in the world right now. Does the other apparel make any difference? Can they do anything there?
I mean, I think apparel is even more difficult and challenging, than the footwear business.
Yeah.
But these guys, I think, the other point that I'd make is sort of 80 to 115 is this is an amazing global brand. I don't think there's a better brand anywhere out there, and competition, as you said, has always been there. So I think if they can get some of the product right, moving in the right direction, you'll start to see, better results, cleaner inventories, margins, and top line we can see the recovery. But this is definitely
This is not a if you go woke, you go broke story. It's nothing to do with that, does it?
I don't think it is.
Really? It's just coincidence. It was at 123. It's now at 80.
Oh boy. Oh yeah. Next one up here, Nike culture has to be rebuilt. Okay.
Very critical. You turned on this company, a few months ago? Despite a lot of the analysts saying now's a good time to buy, you said it's going to be bumpy from here. So I assume you feel pretty vindicated given what we heard last night.
I don't know, vindicated. I just hope I help some people make some money or not lose money. But look, the big problem here is, and you brought it up, is they've lost a lot of people. And a couple things that were said on the call, one, that they're reinvesting some of the $2 billion savings into talent. Number two, that they said, we've done this before in 2018. And then lastly, at the end of the call, the CEO said, one of the best things about Nike is the people and its culture. Well, they laid off a lot of people, and I don't know how well that culture still exists. And, that is the foundation of the business. And 7 years ago, when they came out of this before, or 6 years ago, that they had the foundation of that culture. It's not there. It's got to be rebuilt. And I think I think they could make the revenue number on sell-in and wholesale, but I think there's risks to the gross margin, even in this revised down guidance.
So what about Lululemon? Their stock's down over 40% this year. It's done far worse than even Nike, which is hard to imagine. Does their culture also need to be rebuilt? What about Allbirds that's about to go bankrupt? Do they need to rebuild their culture? What about Under Armour that's nearly to penny stock territory now at this point in time? Does Under Armour need to rebuild their culture? If it's a trend in all these industries and all these global companies, people don't understand. I think it's been too long since we've had a real recession, right? We technically had a recession. Well, you can make an argument that we actually had a recession in 22, but people say, okay, we had a recession in 2020 during the Rona shutdowns, but it came back so fast, it was almost, and it was a government mandated recession. So that one really didn't count. So the last time we really had a for real recession was a great financial crisis. I think it's been too long. And people are confused. They don't understand that when you're in a recessionary type times, all companies are going to be reporting bad numbers, except the absolute freak situations like a Palantir and Nvidia and Elf, like the 1% of the 1%. Outside of that, you're going to see damage across the board, right? What about Pool Corporation, the biggest pool company in the world? They're talking about, in terms of pools being built this year, in terms of remodels, down 15-20% this year, and it could get worse than that, right? Do they need to rebuild their culture at the Pool Corporation? Like think about this, right? Like you could go through these companies, industry after industry. If you see a clear trend that is consumer pulling back in a massive way, you have to take into account that it's bigger than what's going on at an individual company. And there's recession, right? If it's all these companies doing it other than the 1% of the 1%, come on, man, you got to put the pieces together here.
Wait, why? Because, they were able to grow margins and they had a big profit beat. And the whole mantra has been profitable growth. Isn't it the revenue growth that the street is more worried about right now?
Well, maybe, but the thing is they're going to switch from selling through at direct to consumer to selling in at wholesale. So you have a mix issue there. And then you're counting on this new product that's going to sell through at regular price. And while there are a few things that are doing, well right now, Nike's a huge company. This Air Max DN isn't selling through well.
And by the way,
there are a few things that are.
Was this miss even that bad? Analysts were at $12.8 billion. They came in at 12.6. $200 million on a $12 billion quarterly run rate is a very small amount. And they also destroyed earnings per share. So, the way these Wall Streeters talk, you'd think the revenue missed by $1 billion or something like that, or $2 billion. Like, holy smokes.
Well right now, Nike's a huge company. This Air Max DN isn't selling through well. They've pulled back on the three shoes that you mentioned before, but they're telling you they're selling more of those into wholesale. And sell in and sell through do not necessarily match. And that's the problem here. It is, I think the back half guidance is still hopeful. And Nike has a lot of leverage with their retail partners to say you got to take this. So their wholesale book is
Yeah.
a lot
Well,
of, we really need you to take this.
I guess where you could be wrong, Sam, is that if this is a kitchen sink quarter, and that's what some of the analysts are trying to ponder today, whether it's just a reset or whether they're just, this is kitchen sink and they're setting themselves up to beat. And they see what I've heard is they see consumer reaction to some of the new shoes, the new Peg, for instance, in running. And while they're not taking back share yet, they feel confident that that's coming because they see the reaction from wholesale and from consumers to some of their new products. And that should sort of ignite the turnaround. That's the bull case.
It should. The question is, will it? And the thing is, if you compare this company to Adidas, had a lot of their core classic products sort of nascent for a while. They're bringing that back while they develop new product. Here, you've got your best product you have to pull back on, and you have your fingers crossed on the new product. The Air Max DN is not working. The sell-through rates on like the Jordan 4 that launched a couple weeks ago are disappointing, to say the least. A lot of that stuff's going to have to get marked down. They felt very confident at the end of the third quarter that the back half of this year would be better. Now they feel less confident. I don't think all that bad news is out of this thing yet.
Well, we certainly appreciate you joining us. Stock down 19%. At some point, Sam, does it get interesting here? It's already sold off double digits into the print. Now down another almost 20%.
Well, I lowered my price target to $67, but what I would say this is, they have to prove that they can, they know what's going on, that they have the people and the culture to do it. And I think that, at the end of the day, is the real question. You can look back, but it's a totally different crew there now, and I would argue it isn't as established a crew as what they've had in the past when they've got out of this in the past. So, if things improve, that's the underlying problem of the whole thing.
Sam
I think
Poser,
that's what everybody missed going into the quarter. Thank you.
Yeah, you've been warning about that for a while. Sam Poser, thank you very much. And one other comment that I heard from some of these top executives, Carl, we talk a lot about Hoka taking share.
So I'm trying to back this up a little bit here to kind of see on a 2-year basis. So what I'm showing you right now is very important, what I have in front of your face, okay? So this is great for me, right, as an ELF shareholder, but let me be very clear, this is not good things for the economy, and it really goes to show you how, really hit the consumer's been in the last couple of years, right, by inflation. And they've had to pull back on a lot of higher ticket purchases, and they've had to trade down, right, if they are going to get something. So cosmetics, beauty, it's a need. Like, it's not like it's a want for people. Like, it doesn't matter how good the economy is or not good, or how, paycheck to paycheck you're living or not. Like, people are still going to wear their cosmetics. They're still going to wear their makeup, right? And so ELF has, obviously, business has boomed the last couple of years, right? The stock's up 575%. The numbers have been extraordinary. Meanwhile, Estee Lauder, which sells very high-end makeup, right? Relatively very expensive cosmetics, that stock is down, 56% in the last couple of years, right? And so that shows you exactly what has transpired at this point in time, right? Now, when it comes to buying a new pair of Jordans or Air Force Ones or things like that, right, that can be a little bit more of a discretionary purchase. Like, if you got the money around, you got an extra $150 and you really want the new pair of Jordans, you go out and buy it, right? But if you don't, you're not going to. Cosmetics, you're going to buy it no matter what. But people will trade down from an Estee Lauder and they'll say, I can't spend $80 on that, but I can spend $8 on the product that ELF has. And so ELF's seen their business boom, which has been great for shareholders like myself, but it's not good signs for the economy, right? Walmart stock Walmart stock's probably at an all-time high right now, right? Or pretty dang close to it. Look at Walmart stock. No. Here's the deal, okay? If Walmart stock's at all-time highs, it's not good news for the economy. I'm sorry. It's just not how it works. If Walmart's having a blow-off top, that's not good, okay? That's not good. If you see Walmart having a blow-off top, which is exactly what's happened with Walmart stock really over the past year or so, Like, that's not good. That means consumer is trading down. They're saying, I got to shop at Walmart, because Walmart's always, psychologically, it's in people's brains that, like, I'm going to get the best deal at Walmart, right? Whether that's true or not is another subject, but Walmart's done a great job of branding themselves as that. So when Walmart's having blow-off tops, I'm just telling you, that's not good news for the economy, for the consumer, and that's why you're seeing so many of these companies have weakness. It's not that the business models are broken and they're done. A lot of it just comes down to, a lot of people are living paycheck to paycheck right now. This is literally the last bad report for Nike.
Down double digits, but you didn't change your rating. You still have it at outperform. You didn't change your price target, still at 120, where the rest of the street's at about 110. What are you seeing in the stock? What upside are you seeing that other people aren't seeing?
Yeah, look, I want to be clear. I mean, I recently upgraded Nike. I've been on the sidelines for a while and just recently upgraded. I upgraded this report. So, as I look at last night's report, I mean, look, it's messy. It's weak, right? But I think there's a silver lining here. I think this is, when I've been telling our clients, I think this is the last bad report. This is a clearing event. Nike's had its issues, but I think the biggest positive here, when I was talking with management last night, they get it. Okay, they're repositioning this company. And I think behind all this noise, behind the miss, like you highlighted, in the fourth quarter, the guide down fiscal 25, what we are seeing is that where Nike is putting in new innovation, the new products, those products are selling well. So that gives me confidence, that as we look over the next several quarters, couple of years, we will see an improving trajectory at Nike. And now you're getting the stock on sale.
So you're the person that has a lot of confidence in their innovation pipeline, because we spoke to an investor yesterday. They had some questions. A lot of your peers in the analyst community, they have questions about that innovation pipeline. UBS out with the note saying it takes about 18 to 24 months to get a new product online, but you're saying you have a lot of confidence. Who else was talking to Nike management? Or Sarah Eisen. Some big issues here. I'm just looking at the things that she heard from them. The lifestyle business decline. I believe that includes Jordan and things like Air Force Ones, even though they're technically basketball shoes.
Before we go further here, let me address the point on, do I agree with this gentleman that this is a clearing event, like this is as bad as it gets for Nike? Okay, I think there's a decent probability of that as long as inflation stops hitting the consumer. You can't keep having these issues with inflation, keep hurting the consumer more and more and more. And every time you think like, oh man, maybe it's done, you have something else. For instance, a good example is auto insurance. I mean, a lot of people's auto insurance has gone up 20% just in the past 6 to 12 months. 20%. Like, that's an insane number, and auto insurance is a pretty big portion for folks, right? Homeowners insurance, because a lot of people's home values have gone up, a lot of people's home insurance has gone up dramatically, and they're getting hit with that right now, right? And so you, every time you think like, okay, inflation's probably done, like the consumer gets hit by something else, and then there's something else, and then there's something else, and that ends up taking money away from anything they had as excess, right? And so that goes back into our subject of like a lot of people living paycheck to paycheck, right? It's not everybody, but it's like I said, it's probably the biggest portion of people living paycheck to paycheck right now that we've probably seen since the great financial crisis. And so that's a trouble. And so if we're in a situation where it gets better from here and people stop getting hit by this inflation, okay, then we can talk about this was as bad as it gets for Nike, it only gets better. But if people still get hit by inflation harder and harder this next year, it will get even worse for Nike. You'll see a down 15% type number.
It's from their direct-to-consumer business due to that higher share of lifestyle. And then traffic in China declined beginning in April based on macro. How big of a deal is the China part? Why don't we finish on the last one, or start on the last one?
Well, look, China is important really for two reasons. I mean, one, fundamentally that, it's a relatively decent sized business now for Nike. So when you have slower growth in China, that weighs upon total company results. So that's really the fundamental argument. For me, when I think about China, I think the bigger implication for Nike is the valuation with the stock trades. Because anyone looking at Nike, especially from a longer term perspective, thinks the longer term growth trajectory of this business will be dictated more and more by China. Given the, Nike's still relatively small size in that very large market. So China's important, okay? They called out China again as, is weaker than they want it to be. China's one of the reasons they lowered further guidance for 25. But again, as I look out, okay, I still have a lot of confidence in the Nike brand within China.
All right, you're seeing it long term. I want to talk about more short term. So one of the things that management mentioned is that the NBA Finals, which honestly, they weren't great. It just went by so fast.
China has a ton of issues, obviously. They're working through those issues right now. And so that's another market that's it's a huge market for Nike, and it's really impossible to predict in the short term. Am I extremely bullish on Nike in China and China in general over the next 3 years, 7 years, 10 years? Yes, absolutely. Am I necessarily super bullish on China? Nike in China and China in general, the next 3 to 7 to 10 months? I don't know about that. So once again, it gets into, are you viewing things from a little bit of a longer term perspective, or are you viewing things in a short term, right?
Jason Tatum against Luka Doncic. Both of them are Jordan athletes. They were really high on that, but I don't remember anybody talking about it. I'm a huge NBA fan. I don't think anybody was talking about the Jordan brand with the finals. Is that a read into the Olympics? A lot of people think the Olympics might be a boost for the company. The fact that...
That's not understanding subliminal marketing, sir.
And Nike didn't really come up during the finals. Is that a read to that, to the Olympics?
I don't know. I think one thing Nike does very, very well, even through these more difficult times with the company, is branding. I know they're excited about the Olympics. They typically use the Olympics as a big branding event. I personally think the Paris Games this year will be an opportunity for Nike to introduce new products. I think it's going to be an opportunity for Nike to kind of reestablish this brand. So I think that's a positive. Is it a clearing? Is that an all-out positive? No. I mean, it's a step forward for Nike. I do think that's a positive. Frankly, I think the NBA is a positive too.
Yeah. Got to understand marketing on a high level. Nike stock trips on earnings after missing revenue estimates.
After reporting a miss in revenue expectations on their
stock was only down a little bit at that particular time.
This report just moments ago. Joining us now is Adrian Yee of Barclays. Adrian, this is a rough one. I mean, your price target is around 109, but this is flirting with 52-week lows, at least in the extended session. What do we need to hear?
Spoiler alert, it goes to 75, sir.
From management on this call?
I think you need to hear that there is more certainty on the actions that they are taking. I'll be fully honest with you. This is a very disappointing report. I think the DTC came in significantly lower. So if you just think about the structural elements of what's going on, the mix shift alone to wholesale is margin dilutive. But then they're also telling you that they're getting margin pressure and they missed all the marks on their direct side of the business.
Margins were also up. They were also up. And by the way, I listened to the conference call 4 times, and management basically did exactly what she wanted there.
A combination of what should be good turned out to be bad, and we already know that there was a dilutive mix shift to the wholesale business. Disappointing.
I'm no Nike analyst, but it seems to me like DTC from so many of these brands is what, not only in the near term, but strategically, you need to be strong. The idea that you can control your own destiny, that you can sort of drive your own relationship with the customer, no?
That is 100% correct. The DTC portion and channel of the business is actually retail, right? If you were 100% retail, that's your brand innovation, that's where you're platforming, and you are 1 degree removed from the consumer. You talk directly to you and to myself. Through the wholesale channel, you're 2 degrees removed. So if you are not resonating with the consumer in the DTC channel, it is a problem. What I will say is that the company had shifted from wholesale to DTC, overreached the mark, and is now going back. So part of this is actually going back. But
and guess who called that as a big mistake years ago? Moi. I said that was going to be a big mistake, and sure enough, it's a big mistake. Came back to bite Nike, and now it's giving me this beautiful gift of buying Nike stock for insanely cheap pricing. So, I'm glad I wasn't buying Nike back then. I'm sure happy I'm buying Nike right now.
Investing in the part of the business that drives sales and the business forward.
So who's winning? Because, I mean, years ago, 10 years ago or so, you might have thought, well, if Nike's losing, it's going to be because, say, Under Armour is winning. Under Armour is not winning. So is it just the smaller brand?
And the crazy thing is, analysts back at that time, were thinking that was a great strategy, and they were bidding the stock up, and it was having blow-off tops. I mean, the stock went to like $170 a share, right? Versus now it's like $75 a share. And that whole time I kept telling you guys, like, this is a mistake on Nike's part. Like, they shouldn't be doing this. And sure enough, like, who ended up being right in that situation? Surely wasn't the Wall Streeters once again. You
might not think of on a public company basis to be a challenge, or what?
The biggest problem is I notice a lot of the Wall Streeters, they don't understand business. And I know that's like sounds crazy because it's like, how would these Wall Streeters not understand business? They actually don't understand like how a business is built. They never built a business. Think about that. If you're a Wall Streeter, you never built a business. Let that sink in for a moment, right?
Yes. It's the confluence of these high heat younger brands, Hoka, On. What I'll also say is, I think we've talked about this before, but the silhouette shift, the wider leg bottoms, right? And away from athleisure. So you're moving away from performance run, which has had its sort of topping moment, paired back to athleisure. And this kind of silhouette denim-based shift is kind of moving back to, I don't know if you remember 2017, the flat bottom casual, Adidas and Samba selling out, right? So we're kind of moving back to Air Force One while they're liquidating Air Force One. Timing's just off.
Okay. All right. Next one up here, B of A's analyst here. This is a much bigger reset than we had expected.
Big bullish call, Lorraine, and it appears that it was either wrong or too early. What do you make of the quarter?
Yeah, look,
I just don't understand how you can analyze businesses if you've never built a business. You know what I mean? Like how is that possible? That's like trying to analyze, a quarterback, and you never played quarterback before. Like I try to do it, but like how? You've never even done it yourself, right? Like that's what I really try to understand. How can these people really analyze these businesses if they've never built businesses? The great thing for me is I built so many businesses over the years doing different things that I get to see like, oh, this marketing strategy is dumb. Like, oh, this is smart. Like, this is the way they're doing this. This pricing isn't quite right. Like, and just these Wall Streeters have never done it. And yet they try to analyze these businesses. And I'm just like, how can you analyze a business if you've never done it? How could you analyze anything if you've never done that thing, right? I mean, otherwise you're just kind of a fan.
We expected a bit of a reset out of Nike. We had previewed the quarter expecting them to temper their revenue expectations. This was a much bigger reset than we had expected. And what's going on is Nike is taking some very aggressive actions to remove inventory from its digital channel that's slower moving. They had a choice. They could, let it out slowly at a discount, or they could just rip the Band-Aid off. And they did the latter. So they're pulling a lot of the lifestyle product off of the website as it's slower moving. And the problem now is there's a timing shift. They have a huge wave of innovation coming in the back half. And in the meantime, we'll see some declines in revenue until some of the newness that's beginning to test really well in certain geographies and categories starts hitting in the back half.
I mean, there is increasing chatter with a quarter and an outlook like this, Lorraine, as you can imagine, from other analysts and investors around the leadership team. Are they the right ones in place to engineer a turnaround and bring back the innovation? Is the culture in the right place where it's been, where Nike has been on top and a winner? What do you say to those concerns?
Yeah, we're in the middle of a big shakeup. They've cut costs by $2 billion. They said last night they'll be investing $1 billion back in customer-facing activities. It's hard to go against a brand with $1 billion coming at you. So what does that mean? That means marketing, that means demand creation, that means Olympic spending, and it means investing in some new people. So one of the key problems has been a lack of really great innovation. And so I think they need to address that quickly. They're talking about it, they're testing it, but we need to see results soon.
There's a lot of efforts right now this week to string together themes between Nike, Levi, General Mills.
This comeback to innovation, it just cracks me up because they keep coming back to this, making it sound like it's flipping flapjack in NVIDIA stock or something like that, right? And they got to come out with the new chips. Listen, man, we're selling shoes here. We're selling shirts and shorts and, leggings and hoodies. This isn't a flippin' flapjack and chip company, okay? It's not about necessarily innovation. It's about coming out with a product that obviously people want, okay, cool, but it's also about people having the money to actually buy your product. Like, holy smokers, this is no joke. It's like, come on now.
All green, I know some names that are not in your universe, but are you a fan of those efforts to make some broad comment about the consumer?
The consumer's been okay for a while. If you look at my sector specifically, it's the product you spend on when you spend on everything else. So it's very discretionary, and it's been choppy for 3 years. Apparel and footwear.
Not fair at all. It hasn't really been choppy for 3 years. It's really gotten choppy or bad really in the last 6 months. Look at the company numbers, look at the company earnings, and you're going to see that trend. Specifically in the last 2 quarters for companies, they're starting to get hit. They're starting to really be hurt. A year ago, 2 years ago, a lot of these consumer companies were fine at that particular time, right? I remember Apple kept putting up numbers, and it's like, how does Apple keep coming in? How do they keep growing? And then finally it caught up with them, right? In their latest quarter, iPhone revenue is down like $6 billion on a year-over-year basis, right? So it's caught up now at this point in time. Like the days of the stimulus are long gone. The days of people feeling pretty good because inflation hadn't really hit them that hard, those are long gone now at this point in time. And obviously, in terms of credit, it's gotten a lot more expensive to do car loans, home loans, credit card loans, anything like that.
And simply a market share grab in a slightly declining business. I don't think that's changed, and I wouldn't attribute Nike's problems really specifically to macro. While they have struggled recently in China and Europe, the U.S. business is fine if you have the right product. Nike is just losing share, and they are.
Why is Lulu's stock down over 40% this year? Why is Lululemon stock down over 40% this year? Right? Like, why are all the other competitors of Nike, having a lot of trouble as well? Like, come on, man. Nah.
Taking some really big steps.
All the other big global companies are all starting to report disappointing numbers, right? It's bigger. It's a lot bigger.
To try to change that trajectory.
They say that they have confidence in the order books from wholesalers, and that gives them optimism that what they're doing is working, particularly on the performance business where they have seen double-digit growth. Do you buy that, or does it worry you because the wholesale business is what they had been de-emphasizing up until recently because it's not as profitable and it wasn't part of the long-term plan?
Look, it's been a really long time since we've heard positive signs out of the specialty run business. That's a performance business, and we've generally seen performance lead lifestyle, right? If you have great brand heat with the top athletes, everybody else will typically follow and want to buy the shoes. So I'm encouraged by the double-digit increase in performance in the fourth quarter. I think the order book reflects some real innovation that they're putting out there in running and basketball, and I think that's a good sign. What they need is some new lifestyle products to combat some of the newer entrants that are gaining a lot of heat.
So how do you value a stock right now?
So when I was in New York City, obviously New York City on, Fifth Ave or whatever. I mean, there's just loaded up with stores, the Louis Vuittons and the Hermes stores and Apple stores, a fabulous Apple store there right across from the plaza. We were staying in, all those sorts of stores. And there's a massive Nike store. There was actually a Hoka store we went by as well. There was nobody in the Hoka store, by the way. And it's not to say they do bad sales. It's just they're a really small company, right? Or a really small brand compared to some of these others. We're in the Nike store. By a mile, it was the busiest store out of any store, and not by a little bit, but by a large margin. But at the end of the day, okay, Nike store is super packed, 1 million people in that place, right? But how many people were actually buying stuff, right? And so that goes back to the whole subject and the whole story about, okay, people might be looking, they might want it, but if they're living paycheck to paycheck and they can't afford a new pair of shoes or a new thing of this, they'll just look, but they're not actually buying anything, right? And so, once again, very important subjects overall.
Down 19.4%, which makes it the worst day for Nike since 1987. The stock went public in 1980. 87 was, of course, the crash. There's clearly a reset going on here and some confidence issues. How do you value it?
Sure. I mean, so right now the stock is trading around 23 times this year's estimate. We think that as there's confidence building and as we start to see that -10 improve through the year, you will start to see investors give it a better multiple. I think that what people are looking at when they value it today is they're looking at trough earnings. I think $3 to $3.20, where the street shook out, will be trough, and I think you do need to put a higher multiple on that trough. You want to buy great brands on a reset, and we think this is the time to do it.
Yeah, I mean, it's easy also to create a list of names that have just crushed it this year, whether that's Crocs or On or Gap or Abercrombie. Some of those you do cover. Is it fair to say that the best performers year to date are your favorites?
Those are all small brands. Like it's relatively easy for them to kind of get numbers up if they're like the hot product in the market right now, because they're not really like global companies that are like these massive things and whatnot, right? But hot things come and go. Those are what we call, fads. right? Crocs is a hot thing. My kids got Crocs, and are Crocs still the hot thing? I don't know, 5 years from now or 10 years from now. I don't know about that. But for right now, they are, right? And so when fads are happening, it seems like, oh, this is going to be here forever, but then they end up getting phased out over time, right? And copied or imitated by other companies and, phased out over time.
The best performers year to date have been real share gainers, right? They have product that's innovative and interesting and is really gaining the customer's attention. I think if you look at, say, the off-price retailers, they're coming out with value that's second to none. And I think those are the exciting places to be because the customer they have a little less money and they're very interested. So I think, it tells you that the consumer, while just okay, can be great when you have the right assortment.
Alrighty, so Nike, recap here, kind of my feelings. By the way, I did a very, very in-depth Nike video on the main channel. If you didn't get to see that a couple days ago, you definitely want to check that baby out. But the moral of the story is, when all these massive global companies are getting hit one after another with their numbers that are specifically consumer-facing companies, you have to start to wake up and realize, we're going through what I would call a consumer recession. And when companies like Elf, companies like Walmart are having blow-off tops, I just don't think that means good things for the economy. Because when people are trying to go for the cheapest thing possible, that doesn't mean you're in a strong economy. That means you're in a weak economy. That means the consumer's in a bad place. Let's be very, very clear about that. When you're in good times, when you're in an actually really strong economy with the consumer is not looking for what's the cheapest I can get. They're looking for what's the best I can get. They're looking for what gives me the best experience, those sorts of things. And that's just not a subject right now, okay? And so, anyways, I think that's just important. Everybody kind of understands that and kind of my feelings on what's going on there. But it's a beautiful year. I think 2024 we're going to look back on this year and kind of view it very similar to how we viewed Meta in 2022 as just an extraordinary opportunity with a great company with such an amazing brand that people are kind of, kicking to the side right now. And a lot of people are giving up on. And I think we'll look back and we'll be like, dang, that was actually really easy money stock. Like, we should have been picking up shares. And I think that's going to be Nike come 2025, 2026, 2027. We'll look back and we'll be like, dang, like Nike was actually really easy money if we were just buying in 2024. That's what my opinion is. We'll see how it all plays out over time, but that's kind of my thoughts in regards to that, folks, okay? Hope you enjoyed today's video. As always, 1000X stocks. We're only a couple days away or a few days away from that big sale. If you want access to that, pinned comment down there, enter in your name, enter in your email. We'll send over that deal as soon as it drops on July 4th, and that's access to our search feature, that's access to our compare feature where you can compare a bunch of different stocks against each other, access to our earnings call feature, and access to our SEC filings as well. So you can just, search a company, find the ticker symbol, listen to conference calls, SEC filings, all that good stuff, okay? Much love as always. Appreciate y'all and have a great day.